man, interest rates are really high. And, should I wait, to buy my home? But, probably more importantly, if you could just talk about why are interest rates so high? And then what should a potential buyer be thinking about when it comes to interest rates? Hello, everyone. This is Shannon Klug. I'm CEO and managing partner of Blumark Tax Advisors. I'm here today with Mike Jones, good friend and ally in the business. And Mike, why don't you tell the crowd a little bit about yourself and your background?
Yeah. I'm Mike Jones. I'm with Neo Home Loans. I've been, registered mortgage loan advisor for a little over 20 years now. Worked extensively with both veterans of our U.S. military as well as medical professionals. Encompassing anything from MDs, DOs, DDS to CRNAs, RNs, LPNs. The whole gamut, and really pride myself on doing a lot of education along the way, helping people finance, a home purchase, whether it's a starter home, a dream home, or, a downsize home, just depending on the stage of life.
Thanks, Mike. And we've been working together for years. Mike is obviously a expert in the field, but also at the same time, he's a trusted friend, and he takes care of our customers in the same manner that we do. And what I'd like to do today is just talk to Mike about the real estate and mortgages in general. I know we share his passion for education as we continue to work on being financial literacy partners for many of you. So, Mike, let's just start with the first question. When is the best time to buy real estate or to buy a house? If you're talking to a potential customer, or for us as we're counseling new customers, when is the best time to buy a home?
Well, I often use the analogy, it's like a tree. Best time to plant a tree was 20 years ago. Next best time is today. But I think it boils down to really two questions that I think are the most important questions. And that, first is, will this benefit your family? Will this make your life better for your family? That's question one. Question two is, can you afford the payment? Can you afford to buy the house? If you can answer yes to both of those questions, then yeah, it's the right time to buy. If you can't answer yes to either of those questions, either it's too much of a financial burden, or it's not going to enhance your life or make your life better in some way, probably not the best time, or probably not an ideal move for you at that stage of your life.
So, Mike, I think that's great advice. I guess the secondary question of that then is, what should I do to prepare to ultimately buy a home? What are some of the steps that I should be thinking about?
Well, again, I like to use a lot of analogies when I'm talking to people. It's like when you're having kids, you want to be ultimately prepared. You want to have this, you want to have that, you want to know this, you want to know that. But, once you have a kid, you're like, crap, I wasn't even close to prepared. There was a lot more stuff going on. So I think some people can get paralysis by analysis, and kind of overthink it. But really, getting prepared to buy a house is a couple of main things. Number one, have secure income. Because the last thing you want to do is get in a house, have that financial obligation, and feel stressed with it, or not be able to meet that obligation. So have good, steady income, reliable income. Have some money saved up. Buying a house, typically you want to have around 5% or so. There are down payment options, down payment assistance options. But if you can have a little bit of money to put down, but more importantly, some extra money for moving costs, things that are going to come, with buying a house, you do want to have a little bit of a cushion there. And the second thing is your credit. So, you're allowed to pull a free credit report once a year from each of the three bureaus. That's TransUnion, Equifax, Experian. So kind of monitor your credit, see where you're at with your credit, and make sure that everything is in order there. Sometimes just paying down a credit card will be enough to really boost your score. And that's something I look at with people. Every person that applies for mortgage with me, one of the first things we're going to do is pull credit and look at it. If there's something we can do to help you increase it, I'm going to educate you on what to do there. I've looked at thousands of credit reports, and as opposed to you just on your own trying to figure out your credit report or figure out where the best bang for your buck is, I'm going to look at it, run some analysis tools, and tell you the best place to put your money to increase your credit score, because that small increase on your credit score can have exponential impact on your payment over time on that mortgage. So I would think having good credit, have your credit in place, and have a little bit of a financial, not a huge nest egg, and you don't need to have a big 20% down payment, but a little bit of money to put towards the mortgage so that you can get more favorable terms on your mortgage loan.
Thanks, Mike. I think it's great advice. Very similar things that we would coach our customers through as well. What we do hear sometimes from customers and some of our younger customers is, man, interest rates are really high. And, should I wait, to buy my home? But, probably more importantly, if you could just talk about why are interest rates so high? And then what should a potential buyer be thinking about when it comes to interest rates?
Yeah, I mean, it's a lot of news. It's a lot of headlines in the news, and for a lot of your clients, a lot of new first-time home buyers, they don't know anything other than 3-4% interest rates. They just kind of think that's the norm. That's what a mortgage should be. You look historically, those interest rates, honestly, 6% is a pretty healthy rate for a 30-year instrument, which is what a mortgage loan is. So if people back when rates were 6 or 7% had waited for rates to drop, they would have waited, probably 30 years in some cases for those rates to drop before buying a house. So, trying to wait out the interest rates and time interest rates, not a great strategy. It's just like with you guys and stock markets and other investments, trying to time those things. There are very few people that actually hit the best or the lowest rate or lowest price on an investment versus those that, just go in when the time is right. And we can always refinance, when you're buying a house, if rates do drop, if and when rates do drop, then we can always refinance and kind of fix that and get you into a more favorable term. But the cost of waiting is what really will get to people. Right now, with where interest rates are at, a lot of people can't necessarily afford a house, but and so that's kept a lot of the competition down. So there aren't as many people fighting for houses. That's not to say there aren't a lot of people out there that want to buy a house. There are a lot of people out there that need and want to buy a house. They just can't right now. Either there's not homes available or they just can't afford it. So every 1% that those interest rates drop, it's going to bring 5 million more people across the country into the market that now can't afford to buy a house. And what that's going to do, obviously, is increase the competition, which will drive prices up. So if you are waiting for interest rates to drop, yeah, interest rates might drop, but now you're going to pay a lot more for the house than you would have just by paying a little bit more interest until we could refinance it later. So trying to wait out interest rates is not a winning strategy. It's going to cost you a lot more in the end. And not just financially, but emotionally, because you're going to be in competition with a lot of people then that are trying to fight for those same houses like we had, a few years back when people were making crazy, ridiculous offers because we do have such a shortage of homes versus people that need a place to live.
Yeah, absolutely. And I think another way I've heard it said is marry the investment, but date the rate. And I
Yep.
think ultimately, there's not only are interest rates high, but housing prices are high as well. And it's really trying to marry those two together or blend those two together to make the ultimate investment decision for yourself. But with that, I guess another question would be, are we in a housing bubble, and could we see prices coming down pretty significantly? I know for some older investors, they remember the last time we went through a trough and there was just a ton of buying opportunity. So what do you think about, are we in a housing bubble right now, and could we see pretty major falling prices here in the near future?
So if you look historically over the past 30, 40 years, we've only had 7 years in that entire span where home prices dropped. Home prices are going to continue to appreciate. It's just a supply and demand function. And 5 of those 7 years when when home prices did drop was during the Great Housing Recession, 2007 to 2012. And that was caused by the housing industry. That is because back then we could give a mortgage to anyone. People were buying homes that they had no business buying. They were buying homes that they could not afford. And that's what caused that big housing bubble, that big housing debacle. We're in an entirely different situation now. We don't have a gluttony of homes available. We have a gluttony of people that need homes. 2007, 2008, everyone was buying a home. They thought they could turn around and flip it and make a lot of money. So, there were just a ton of homes, but not as many buyers. And that's what created that bubble and that big drop in price. Even if interest rates drop, we're not going to see home prices drop. Like we talked about before, we're going to see more buyers come into the market, and that's probably going to drive prices even higher. When I'm talking to clients, I'm like, look, this is a fast moving train. Home prices have always gone up. They're going to continue to appreciate. And the sooner you can get on that train and kind of keep along with appreciation, the better off you're going to be. If you're trying to run alongside it and try to, it's going to get further and further out of reach, to where you potentially won't even be able to buy a home, 10 years from now, if you don't get on it sooner than later and start riding that appreciation train with everyone else.
Yeah, again, it's just fantastic advice. And I think those that are watching us today see why we've dealt with Mike and his organization for a long time. He's a counselor, he's an educator. And Mike, I know you just said it, but just to kind of put a bow on our talk today, if I am a purchaser in the market, should I wait for prices to come down before I make my purchase?
No, I'm again, if you can answer those two questions, is it right for me, for me and my family, and can I afford it? Yeah, I think now, you should definitely buy a house. I tell people a lot of times my story. Back in 2007, 2008, I was building this house that I live in right now. And my house was literally going down in value while I was building it. So I had agreed to one price in March. And by the time I closed in August, my house was worth $75,000 less than what I had agreed to buy it for. My neighbors were freaking out, like, okay, oh no, what are you going to do? I'm like, well, when I went under contract, I felt that that house was worth that value. I could afford that payment, and it was going to make my family better. So, we went through the purchase. I wasn't planning on selling the house a year or two from now. I was planning on it being a long-term investment, which it has been. I've been in this home 15 years now, and it's more than doubled in value from what my original purchase price was. So my original purchase price dropped in value while I was building it. By the time I closed, it continued to drop in value after I closed, but it came back and it's now worth more than double, what I originally agreed to purchase it for. So if you're buying a house and it's a long-term strategy for you, you should never buy a house if you're only planning to live in it for 1 to 2 years. That doesn't make sense. It should be something where you're planning on holding the house, whether you live in it or whether you move out and make it a rental, which is something I would love, I love to talk to people about, because that's diversifying your portfolio, helping you prepare for retirement. But yeah, if you're looking to buy a house, definitely do it as the sooner the better. If it's going to be a long-term investment. A home is typically a long-term investment and should be looked at that way.
Yeah, so we're asked quite often, in this high interest rate environment, should we sell a current property that maybe is at a lower rate and maybe look at buying another property at a higher rate? And I think it's very situational based. I think, at the end of the day, our job is, again, education and helping you navigate and look at the overall strategy. Yeah, I've said in the past, you marry the investment and you date the rate. We don't know what rates are going to do in the future, but we feel pretty strongly about what real estate is going to do. Now, that doesn't mean you just jump at any property. You want to make sure that you buy something that is reasonably priced, but to not take a job opportunity or to not ultimately move on with other financial strategies because 5 years ago you locked into a really low rate really doesn't make sense. I think, as we've talked about before, we have to really look at the overall situation. It's not about one piece of the pie. We really have to look at things holistically. But absolutely, to stay in a property just because of a low rate, on its own, it might make sense, but holistically, very rarely it does. Mike, I would love to hear your opinions on that as well.
Yeah, I mean, a complex question for sure. Lots of layers, as you mentioned. You've got capital gains. You're limited to a certain amount that you can, realizing capital gains before it becomes taxable. So maybe you want to realize that on one house, start a new cost basis on another one. So there's a lot of tax strategies and implications that you want to consider. But it goes back to the same two questions, we've talked about before. Is it going to uh, increase satisfaction or make life better for my family? And two, can I afford the payment? You talked about, we've talked about this before, you can't get emotionally attached to real estate. Everyone gets emotionally attached to their house. Nobody wants to give up 3%. You raise your kids in this house, you want other people to value your house and your memories like you do, but you've got to kind of separate those emotions from financial based decisions, which this is. And so, yeah, if it's going to better your family and your situation, and you can afford the payment, it's the right move. Yeah, the rate should be one small part of that equation, because, like you said, we can date the rate, we can fix that. If rates do drop, we can refinance it and do something lower. Will we see those crazy rates again? Maybe not, but we'll see rates that are affordable. And if it is making your situation better and you can afford it, you should certainly do it.
Well, and I've heard, when it comes to real estate, really where you make your money is on the purchase and not the sale. And if you find an opportunity out there that is a great buy, absolutely, I think you should consider it. So, again, appreciate your insight on that question as well, Mike. So another question that we receive regularly is, what are the tax advantages of buying a home? And I think sometimes you have to be careful about that. One thing that happened as part of the Tax Cuts and Jobs Act is there was a doubling of the standard deduction. And for some people, that standard deduction is so high now that they've heard for years that immediately upon buying real estate, there's going to be tax benefits. You may not receive immediate tax benefits. If you're taking the standard deduction because it's so high for your personal situation, you're not able to also deduct your mortgage interest. Same thing with property taxes. You can deduct property taxes if you're itemizing your deductions. But again, with the tax law change in 2008, or I'm sorry, 2018, for a lot of people now, they're just not taking those things. But the real power of real estate investing is as a property is growing in value, you're not reporting that growth on your tax return. If it's your primary residence, you can have up to $250,000 of gains before even at sale, you have to report those gains on your tax return. And if you're a married couple filing a joint tax return, you can have up to $500,000 of property appreciation before you have to report the gains on the sale. So if it is your primary residence, there's still a lot of benefits over the long haul. But I do see some people that want to rush into real estate because they believe they're going to be able to write off the interest as well as the property taxes. And what I suggest to most of those people is do a tax forecast if that's one of the big reasons why you're thinking about buying a home. Long term, great tax benefits. Short term, it may or may not benefit you. So, Mike, is there anything there that I've missed that you might add when it comes to tax advantages for buying your primary residence?
So, yeah, I mean, typically I'll stay in my lane and say, refer to your Blumark Tax Advisor, for these kinds of questions, because it is multifaceted. We used to sell that all the time. Hey, when you buy a house, you're going to be able to write off this mortgage interest. You're going to be able to write off property taxes. It makes, your income greater every month so you can afford this house. But like you said, with somebody coming at my door, my dogs are excited. With the tax law changes, that's not the case. Most people take that standard deduction. So yeah, the benefits come from the appreciation, from maybe doing a cash out refinance down the road where you don't pay taxes on that income, and you can do some consolidation, other things. Maybe you turn it into a rental. That's where you get a lot of tax benefits, is converting from a primary to a rental property. But buying it as your primary home, expecting tax implication or tax benefits to help with the payment, not so much anymore.
So, Mike, I really appreciate the opportunity to talk today. We value tremendously your expertise, and that's why we invited you to be a part of this video series that we're doing. I also want to thank you for your friendship. I mean, it's second to none. I greatly appreciate it, and I really, really thank you for your time today.
Well, I mean, likewise, I love spending time with you, with everyone in your organization. It's just, it's always a no pressure, a friendly environment, and that's why I do my business. It's all mostly referral based, just doing right by people, and that's I think why there's good chemistry here. I think that's why we work so well together. Is it's just about helping people, better their future, whether it's through some investments that you guys talk about, some tax strategies you guys talk about, or real estate, that I can talk about and help guide, people through. But it's a holistic approach that I think people need. It's not just click here, get mortgage. It's like, no, let's take a step back. Let's look at everything. Let's ask a few more questions to see what you really need, not what you think you need or what you think you want. Let's dig a little deeper. So I really appreciate you and your whole organization as well.
Yeah, absolutely. I think at the end of the day, it's about education and financial literacy, and that's what we're both about. So thanks
Yeah.
again, Mike. Greatly appreciate your time.
Yeah, appreciate you, Shannon. Take care, bud.